Thank you very much for joining us on the link tonight. We are discussing unit trusts. As investors, you need to ensure that you are investing with the proper mindset. That's what we were told every day, to ensure that you have a realistic perspective of your investments. Having a proper mindset, they say, when investing in unit trusts allows us to obtain a realistic perspective of investments that we are making, or the kind of cash that we're putting in. So due to misconceptions about investing, some people have been disappointed when expectations and needs are not met. I have been one of them. But to break the ice in the studio tonight, we have an expert is called Zach Chisesi. He's an alternative investment expert or head at the UAP Old Mutual Financial Services. You're very welcome, Mr. Chisesi.
Thank you very much, Malcolm, for having me. Good evening, viewers.
So to talk to us tonight about there are people who know unit trusts, but there's another language, collective investment schemes, and they have been really very popular this time around. You know, in this market. Yes. They're becoming so popular and collecting huge sums of money. A very good indication that people are beginning to embrace saving. But first, trying to touch into this for us. What are these unit trusts, for instance, to people who do not know?
Okay. Thank you so much, Malcolm, for this. Yes. So as you said, yes, I work with the UAP Mutual Financial Services, which means we are part of the group of companies. Everyone knows us for insurance, but financial services focuses mainly on investments. So the unit trust is what you call a retail product. It's a product which anybody can be a client of, whether you're a group of people, you are probably a private company, a circle, and so on and so forth. So the definition of unit trust is 3 words: collective, investment, scheme. 3 words only. So collective means that all these groups of people entrust us to invest their money, so they give it to us, and they trust us because we have the professionalism and the skills to invest this money. So how we invest this money is that we invest not only in Uganda but across the region, so that we can diversify the benefits to clients. So at the top of this chain is the regulator, who is called the Capital Markets Authority, which says that yes, here is money from clients, but you should follow a strict investment criteria. So, for example, we are supposed to invest in low-risk investments. That means you can invest in, for example, treasury bills, bonds, not only in Uganda, but also across the region. So, for a client who's coming on board, yes, you're going to get a return. And the beauty about this return is that it's not simple interest. It is what we call compounded interest.
Okay. So just before you go very far, you speak of investing in regional bonds and securities and stuff like that, and people have had us, try to encourage them, through stories, talking to them, telling them to invest, in treasuries and bonds, and Bank of Uganda and all that. So speak to us about the performance of these schemes, as far as investing in regional bonds and securities is concerned. What has been the return, for instance?
Yes. So now, when you look at the industry, if you look at the last 5 years, the unit trust has grown by a multiple of over 10. Because 5 years ago, this industry barely had 30 billion. And this is an industry which has even crossed the 1 trillion mark as we speak now. So one of the reasons why that is so is because, yes, you're providing return, and these returns are double-digit returns in excess of 10%. And these are net returns. But beyond just return, because you see, a number of Ugandans have been in so many investments where they're disappointed returns. So return is just one of the benefits. Another reason why clients come to us is because of the component of safety, because you have a team of professionals who are investing this money in line with a mandate, an investment mandate. So that professionalism of having a custodian, a fund manager, trustees who are there, an annual general meeting which the regulator sets in place, all these are actually some of the things that have caused clients to buy into the idea of the unit trust. Yes, there's return, but in the back end there are standard operating procedures which the clients have really been proud about.
Now, before I speak about safety, most of our people in the market think about quick gains.
Yes.
They want to get in and out because people are so impatient. They need money, and that's why sometimes even other people look at unit trusts or collective investment schemes as stock trading or something like that. They need to go in, get money, come out, go and use it. So that sort of impatience. How does someone gain? Because people okay, I know that you said people earn interest, a lot of interest at that, but like I said, some people want quick gains. What would you say to people who want to put in and come out?
Yes, now the beauty about the unit trust, and this is also one of the reasons why clients come to us, is because the unit trust is what we call an open-ended fund, in the sense that there's no lock-up period for clients when they come on board. In fact, when a client comes on board, yes, we do a risk profiling on them, but we do not restrict them as to how long money should be locked up with us. Our responsibility stops in prudently investing clients' money only in regulated products, meaning that we invest strictly with commercial banks, central banks, but when it comes to the return, clients earning return on a daily basis. So the return is daily. So I could be in the investment for 1 week, I could be in the investment for 1 month, for 3 years. It's only you who knows how long you want to be, and that flexibility is the reason why clients who are thinking long term would be happy with the compound on a daily basis. Because if you look at your returns over, say, a 5-year period, you're not going to see a straight line, it's going to be a curve. But even if I have a short-term need and I want to exit in 6 months' time, within T+0 to T+1 days, you have money deposited in your account.
All right, then
so that is the beauty. That flexibility is what also has given a lot of clients that confidence. Yes.
So what is the biggest, if I may ask, what is the biggest bottleneck, what is the biggest roadblock to sort of successful long-term investing? Because the problem here is, I mean, unit trusts are supposed to be long-term investing. You have to look at them like that. Otherwise, you may not get as much as you want. So what is the biggest roadblock here? What do you encounter as you sell to people the idea of investing in unit trusts at UAP?
Yes. Now, one of the things that you do before a client gets on board is to do what you call risk profiling with them. There's not one type of unit trust, there's a variety of unit trusts. So now if you get a client who, for example, is a money lender, and for them they say, for me, I want to invest with you, I want to earn interest, but I will most likely be withdrawing money more aggressively. Then they go to a kind of unit trust which is called, for example, a money market fund, where the kind of philosophy which we, the portfolio managers, have for these clients is we're going to invest in very short-term investments which have low interest rates. If you got someone who says, I have appetite for risk, I'm thinking of long-term, then you expose them to riskier investments, such as you would say equities of companies and things like that. But majority of our clients are mid-term clients. These are people who are neither short nor long-term. The investment clubs out there, the people who are saying, I need to buy land in 2 years, I need to buy. So for these, majority of the underlying assets when we go to invest for them are mainly the long-term bonds, which actually have higher return, but also they have the safety for the treasury security. So in short, we profile the kind of client to recommend which kind of fund they will go for, and that speaks into the return that they are going to get. Yes, please.
So for instance, matching one's fund risk profile with investment objectives is an important determinant factor.
Correct.
For investment, for one to succeed, for one to get whatever they want or to be successful. How do you approach the issue of risk profiling?
Now, when it comes to risk profiling, it's actually something that you study, because every fund manager, because we're not so many in Uganda, but every fund manager has professionals behind who have studied, for example, the CFA course, and there are recommended requirements when you're profiling. For example, when you're profiling someone, you first of all find out what their return expectations are. On top of that, you ask what horizon, the expectations as to when they expect money to be remitted, because someone who's expected to get money in 2 years' time is different from someone who has a short-term need. We also look at some other constraints they have along the way. What are some of the reasons why we would need to liquidate an investment? So when we look at all of those things, we do what we call risk profiling, looking at the return versus the risk expectations, and basing on that, that is what will qualify a client to fit in any of the specific funds. Then on top of that, we regularly review these expectations with the client. And when you meet clients who are expecting so much, sometimes you say, unfortunately, we cannot give those returns, because the truth is the highest returns you'll ever get is when you go into a private business with yourself, a private business. So where we come in is we say, Malcolm, you're starting your private business, but when you've made this money, where are you going to keep it? Am I going to keep it in the bank, or should I give it to the unit trust, where it's going to earn a return and I have access to it as and when I want to proceed in my investment journey? So look at the unit trust as a temporary parking, as a partner to your business, such that when you are comfortable with your investments wherever you are, whatever return is made, we are the custodians of that investment. And that's actually a reason why we even grew significantly even during the pandemic. Because of that, we are custodians and business partners with existing businesses.
All right, so let's now go and compare this with the savings and, for instance, fixed deposits and then unit trusts. Each one of these does not offer fixed returns, for instance, and you know our people. Yes. So, but then again, after that, you can talk about safety of people's funds, because I think we're running out of time.
Yes. Okay, let me just say something. Of course, remember, because we're trying to advise a number of people.
Savings and fixed deposits versus unit trusts.
We're hearing about fixed deposits.
Yes.
Are they competition? Are they partners? So let me just say this, that when you look at fixed deposits, of course, you're going to go to the bank. They will give you a return for a period of time, say 1 year, and you have to wait for 1 year to get this money. Now, what the unit trust does, think about us as far as having a basket of fixed deposits behind us, a basket of treasury bonds. We spread the risk of investments across the investment spectrum. So if you get, say, a 10.3% or an 11% from the unit trust, that 11% is being generated from a basket of investments spread across the region.
Does it depend on my investment portfolio, for instance?
Yes, it depends
how
on your
big
investment.
I have put in.
No, you see what happened in the unit trust, that everybody in the scheme gets the same return, because the underlying assets are the same for everyone. It's just that the underlying assets depend on the risk profile. Am I a short-term investor? Am I a mid-term? Am I a long-term?
We're going to have to lead a very long time, perhaps maybe on the spot, for you to come and explain this, because some of the terms are really very complex, yet very, very important. Yes. But just as we run away, in 2 seconds, how safe is people's money? Because we're running out of time.
Safety is our #1 priority, and that's why I advise people always invest where there's a regulator. If something goes wrong, there's the Capital Markets Authority, which can even suspend our license.
Then you ring the bell.
So CMA is there to safeguard you, as well as the setup of the unit trust, and that's very important.
Thank you very much. So I will give you the chance to reintroduce yourself as you say bye to our guests.
Yes, so thank you very much for giving me this opportunity, Malcolm. For this, we are always there to advise a number of businesses, individuals, savings groups, and so on and so forth. The economy is definitely going to grow over time, and as you look for options, the interest is highly recommended because of its liquidity options. You have the tax exemption benefit, and last but not least,
thank you very much. Thank you very much. Zach Shuses is the head alternative investments at UFP Old Mutual here on the link. Thank you very much.